Okay, so this week we are starting a subject which is everybody's favorite subject, like not in school but in life. We're starting taxes. Yay. Okay, so taxes are obviously a government thing because they're completely confusing and weird. So there are three main forms that we're going to be working with. There are other forms, your situation kind of determines what forms you're going to use. So it depends on if you are working for somebody or if you have your own company or if you do contract work on the side or whatever, or if you take money out of a 401k. There are different forms for all of those things. But there are three main basic forms that everybody uses, or pretty much everybody uses. So we're going to start with those. And you would think that they would be like in alphabetical order or numerical order, but they're not. It's a government thing. So the first form that we're going to talk about is this one. It's called a W-4. W-4s, so the main purpose of it is if you have a job working for somebody, like you work at a company, let's say you work for T-Mobile or whoever, every month your employer holds out money and they pay the government taxes on you, right? So you make whatever, however much, and they take part of that, they send it to government. And then at the end of the year, if you've overpaid, they send you money back and that's your tax refund. So the only way they know how much money to hold out is by doing this form, this W-4. So you're going to fill this out anytime you get a job. And it's always overly complicated, but it's a government thing. Like it wouldn't be a government thing if it wasn't like overly complicated. So, but recently they have simplified it. So before, like you would go through and I have personally messed up on this one. And you would go through and it was like, can you be claimed on somebody else's taxes? So if not, are you claiming yourself as a dependent? And like all this weird stuff, I don't know. And so at one point I filled that out and I was like, well, yeah, nobody else can claim me. So sure, I'm my own dependent. Well, it ends up, they didn't hold as much out of my taxes. And at the end of the year, I got like literally $5. It was very depressing. I thought I was going to be getting like 2,000. They sent me a check in the mail for five. It was great. Not 5,000, just five, like $5. I almost framed it. It was, yeah, I was very sad. But anyway, they have kind of simplified it. So if we look at this form, let me zoom in a little because this is super small. Okay, so the top part, you just fill it out with your first name, last name, social security, address, all of that stuff. And then you click, you're either single, you're married filing separately, married filing jointly, or head of a household. That one's kind of weird. I really should Google that. I know that I'm not one. It says check only if you're unmarried and pay more than half of the cost of keeping up a home for you and a qualifying individual. Normally, you'll either be filing single or married. Some people who are married file as though they're single. I don't know. Anyway, right now, probably you're single or you're married and you're filing together. But either way, you're going to be clicking one of those normally. So if you have only one job or if you have only one job at a time and you don't have income from other sources, like you're not getting some big giant amount in interest, you don't have like royalties from an oil well somewhere. If you have like one job at a time, you just like you're pretty much done right there. You click married or single, and then you can skip all of these things. And then down here, you just sign it and you're done. So it's like super simple. The rest of this stuff is if things are more complicated, right? So if you have like step two, see it says complete steps 2 to 4 only if they apply to you. Otherwise, skip to step 5. This is way simpler than it used to be. So it used to be there were like all these things like how many dependents, do you have kids, do you have parents who depend on you, whatever. It was like a whole bunch of stuff. So now, seriously, if you have one job at a time, so like let's say you worked at Whataburger and then you quit there and you went and you worked at Sonic, well, that's one job at a time. So you would skip this. You'd go through to step 5, you're done, everything's good. If you have more than one job, or if you're married and you both have jobs, you would go through and you would follow through these steps to do this. This is like a 4-page document because it's got all these other worksheets. So if you're having to do step 2 through 4 or steps 2 through 4, this has general instructions down here. So it'll tell you what to do. Okay. Step 3, dependents. If you have okay, so it says if your total income is 200,000 or less, or 400,000 or less if married filing jointly, multiply the number of qualifying children. So the government gives you credit if you have kids, so you normally get more back on your taxes, or your job just doesn't hold as much out to begin with. So if you have kids that are under age of 17, you say you have 3 kids, it says multiply the number of kids by 2,000. So if you have 3 kids, 2,000, you would put 6,000 here. So, and then if you have other dependents, say you have a brother or an aunt or an uncle who's say they're not able to work and they're physically dependent on you, then they would be a dependent. So you'd multiply that by 500. So then you add those amounts up here and then you put there. So all of this stuff, you're not going to have to add it up later on. You're just putting this in, and your company will take this and they'll decide how much they need to hold out for you. Okay, other income not from jobs. So you had interest, dividends, you had retirement income, whatever, you would put that here. If you expect to claim deductions other than the standard deduction. So if you own your own company and you have all kind of business expenses, that would be this type of stuff. Extra withholding. If you want to, you can hold out more tax just in case. Say you want to give yourself a cushion, and you say, okay, we'll hold out $100 extra a month. If you don't owe that at the end of the year, all of that just comes back. I've never actually done that, but you could. If you have a side job, or a little, say you have an Etsy shop or something like that, where you have a side hustle and maybe money's not being taken out because you are your own company, or you have your own company, then you could have your normal employer hold out extra if you wanted to cover the stuff that you're making for your side income. But mostly for now, chances are, at this point in life, all of this stuff for 2 through 4, that's all just going to be left blank. Then you just go down here, you sign it. Employers only, so you actually wouldn't fill this out, your employer would, but so it'll be their name and address. It'll be when you started with the company, and every employer has an employer identification number. It's kind of like the equivalent of a social security number, but for a company, this is how they register with the government. So you wouldn't necessarily know that information. They would fill that out. And that's it. So this is the brand new form. It apparently was revised. Up here it says revised December 2020. So probably if you already have a job, you filled out the old W-4. But moving forward, if you go get another job, this is the one that you'll be filling out. Yay, hooray, W-4s.